All right, I'm here at the rental car center, pretty much a standard setup at every major airport in the US. And it got me thinking, people sleeping on how big this industry really is. And right now, Hertz, yeah, that hurts. It's making headlines again. The stock just popped over 120% in a few days, and I think there's still upside. Okay, let's rewind for a sec. During the height of COVID, Hertz filed for bankruptcy. Travel was dead, CEO resigned, they missed lease payments, laid off like 10,000 workers in 1 month. It was brutal. One of the biggest corporate collapses of the pandemic. But here's the wild part. Way before all that GameStop madness, Reddit, specifically Wall Street Bets, was already going crazy over Hertz. Right after the bankruptcy news, retail traders started bidding up Hertz stock. It surged, I'm not even kidding, like 825%, even though the company literally said their stock could become worthless. And Wall Street, they were baffled. But turns out the retail crowd was right. Almost a year later, in May 2021, Hertz gets a $6 billion rescue deal from Knighthead, Certares, and Apollo. That deal actually gave a payout to equity holders, which in bankruptcy court almost never happens. Some shareholders walked away with $7 to $8 per share, way more than they bought in at during the summer 2020 chaos. So fast forward to 2021, stocks riding high on the post-pandemic rebound. It hit nearly $27, but then they tried to go big on EVs, and that's where the trouble started. They announced they were buying 100,000 Tesla Model 3s. Sounded ambitious, but reality? Not so smooth. Customers were pissed. They didn't want to wait around for chargers, especially for short trips. Like if you're only driving 50, 60 miles, waiting 30 minutes to charge makes 0 cents compared to just dropping $10 on gas. And then came the write down. In 2024, Hertz dumped 30,000 EVs at a huge loss. We're talking $2.9 billion in the red. Stock tanked to 275. That was the low. But now, here in April 2025, boom, the rebound. Bill Ackman, yeah, that Bill Ackman, steps in with Pershing Square. He grabs a big stake and the stock rockets up to 824 in just a few days. So, why is this such a big deal now? Well, tariffs. That's the key. Tariffs are going to push up auto prices by like 10 to 20%. And not just new cars, used car prices too. Repairs, more expensive. So even people who own cars might start renting more often just to avoid wear and tear. That's where Hertz comes in. They've got about 500,000 vehicles in their fleet, valued at roughly $12 billion. So rental car companies rotate those cars every 12 to 18 months. So if used car prices go up even 10%, Hertz could make an extra $1.2 billion. That's nearly half their current market cap. Serious upside. And let's talk demand. Even with a weak dollar and fewer Americans heading overseas, domestic travel's still rolling. Fewer international visitors are coming in too. Yeah, but most foreign tourists who do come, especially from Europe, Asia, and South America, they're either in tour groups, catching ride shares, or renting cars to get around. And ride shares getting pricey. If Uber or Lyft jump another 20%, people are going to start renting for the day and knocking out all their errands at once. I do that all the time. Saves money and stress. Even in a bad economy, people still need cars to visit family, take weekend trips, or just handle life stuff. Rideshare is more of a luxury. You can always take the bus. So yeah, it's not all smooth roads ahead. Hertz still has debt, and some analysts are cautious. But if used car prices keep rising and Ackman's betting right, this stock could still be cheap. And it's not just Hertz that could benefit. Avis is a public rival. Enterprise is private. Even used car companies like CarMax could see a boost from the tariff-driven price spike. But Hertz, with this recent shakeup and history of bouncing back, it might just be the most interesting name in the space right now. Anyway, if you're into value plays or just curious about how real-world trends hit the stock market, this one's definitely worth watching. Don't forget to like, comment, and subscribe if you're feeling the vibe. In a recent vlog, I broke down Walmart and also did a deep dive on McDonald's. Let me know in the comments which company you want me to review next. I'm always open to ideas. Catch you in the next one.